Are higher oil prices about to raise your travel and delivery bills? Here's what's changing now and how to stay a step ahead. Fuel costs are climbing, and they're no longer just a line on a commodities chart. They're showing up in airfare, rideshare receipts, shipping invoices, and delivery app totals. Companies that move people and packages feel margin pressure fast, so they're passing more of it through to customers and tightening schedules to protect profits. That means more variable fees for households and shifting winners and losers for investors tracking inflation and rates. Here's what to watch. Fuel surcharges on delivery and rideshare are becoming more structured and tied to fuel volatility, not just temporary add-ons. Airlines are trimming schedules where pricing is weak and concentrating planes on routes with stronger demand, using targeted fare moves rather than across-the-board hikes. Parcel carriers and postal services are rolling out selective price and handling updates to absorb diesel and jet fuel costs. And the lag between a spike in oil and a change on your bill is getting shorter, defending margins but making monthly expenses less predictable. The mechanics matter. 1 barrel of crude equals 42 gallons, so swings in oil benchmarks flow quickly into gasoline, diesel, and jet fuel. Jet fuel often makes up about 25% to 30% of an airline's operating costs, so even modest increases can trigger capacity cuts or schedule tweaks. A heavy long-haul truck can burn 20,000 to 25,000 gallons of diesel a year. Add 50 cents per gallon, and that's roughly $10,000 to $12,500 more per truck, pushing freight rates and last-mile delivery fees higher. What does this mean for you? Expect more line items tied to fuel and more frequent adjustments. When you shop for flights, compare total trip costs, not just base fares, and consider flexible dates to dodge peak price routes. For deliveries, batch orders, use pickup options when practical, and watch for off-peak windows with lower fees. Loyalty programs can soften fare moves if you redeem points strategically. If you drive for work, track mileage and fuel to capture deductions and optimize routes. For investors, focus on who has pricing power, fuel hedges, and the ability to shift capacity quickly. Rising fuel can change revenue mix and margins within weeks, influencing sector performance and inflation-sensitive assets. Watch commentary from airlines, parcel carriers, and gig platforms for clues on pass-through cadence and demand elasticity. Want the full breakdown, charts, and company specifics? Read the full article at finlitica.com.